Development charge rates have been revised downwards following the regular half-yearly review by the National Development Ministry. A development charge is levied on projects that increase the value of the land they sit on. Analysts say the downward revision in rates was expected, especially given the softening property market. Patrick John Lim reports.
The industrial segment will see the greatest drop in development charge rates, falling by 3% on average. Sector 114, which includes sites such as Boon Lay, Tuas and Lim Chu Kang, saw the largest decrease among sectors at 16%. DC rates for the other segments also fell, the commercial segment dropping by 2% on average, non-landed residential dipping by 1%, and the hotels and hospitality sector decreasing by 2%.
Overall, the drop of 2% is consistent with all the rest of the data that we have seen, but there are specific pockets where the drop, especially for industrial, for example, sector 114 dropped 16%. So that's chief valuer as well as the authorities taking into account some of the recent land tender prices, some of the feedback from the industry, as well as some of the private transactions that may have taken place.
Within the residential segment, the largest decrease was 4%. For some sites in the west and areas such as Stevens Road, Grange Road and Sentosa. Analysts say this was due to a weakening residential market. Meanwhile, they add weak occupancy rates was also a factor for the overall downward revision in rates. And they say the move suggests that real estate prices could continue to edge down.
These sets of numbers reflect a lot more about the past 6 months and the data that Chief Valuer and his team has referenced to. We can read that as that going forward for the next 6 months within this time frame of the DC period, that he expects prices to probably drop 2% on average across all these sectors.
Besides the industrial segment, the commercial sector is also expected to face pressure going ahead, as the market contends with the record incoming supply of new office stock.